Hi, everyone. My name is Erin Kelsey, and I'm here with Adam Strauss, and we're from Pekin Hardy Strauss Wealth Management. We are here today to preview our latest quarterly letter, which we have just published on our website, which covers the topic of sort of the long-term thesis for why you should be holding gold. If you've joined us for one of these videos before, you probably noticed that things look a little bit different. We continue to work from home, so we are coming to you virtually from our respective houses. We've been fortunate to find that whatever we can do in the office, we can do from home, whether that's taking care of our clients or making videos for you. So we are glad to be back. Without any further ado, Adam, before we even get into this letter, gold has been doing really well since, even you sat down to start writing it. This morning, gold passed the $1,900 per ounce mark, which is pretty remarkable. Can you say a few words about just the last couple of weeks?
I mean, I don't know what's been going on over the last couple of weeks, but gold has been on a tear. I don't really have any idea what's going to happen with gold in the short run. We wrote our letter not to talk about the next few weeks or even this year, but really our long-term bullish thesis on gold, which I think, goes out over the next 5 years or so. So in the short run, I'm really sort of agnostic. I don't really know where gold's going to go over the next few weeks.
All right. Well, let's talk about that long-term thesis then. In this letter, we cover a number of different points, sort of talking about that thesis in a bunch of different ways. So I'll just ask you about a couple of those points, starting with, how about portfolio diversification?
Sure. So the gold price has very low correlation to the prices of the stock market or the prices of bonds. And so what that means is that you reduce a lot of portfolio volatility by including it in a portfolio of stocks and bonds. And where that really plays out are during periods where you have significant stock market volatility and stock market crashes. For example, during the bear market of 2000 to 2002, gold went up during those years. During the financial crisis of 2008, gold held its value. And then this year, what we saw in our client portfolios is that in February and March, when the stock market crashed, gold held its value and greatly reduced the losses that our client portfolios would have already shown or would have otherwise shown during those 2 months.
Thank you. Can you also talk a little bit about negative real interest rates and the long-term thesis?
Sure. So let me define what negative real interest rates are. Real interest rates are the Treasury bond interest rate adjusted for inflation. So if Treasury bonds are yielding 1% and inflation is at 3%, 1 minus 3 is -2. That means that the real interest rate is negative. It's -2%. The Federal Reserve has outlined future policies where they expect to keep interest rates negative on a real basis in order to reduce the funding costs for the US government. It's very similar to the policies that the Federal Reserve pursued following World War II, when debt to GDP was also very, very high. And so we're expecting real interest rates on Treasury bonds to be negative for years, perhaps even as long as a decade, until the federal debt relative to GDP ratio comes down to a more normal range. Historically, gold prices have done very well when real interest rates are negative. The reason is when real interest rates are negative, bond investors tend to move some more of their capital into gold to protect their investment portfolio against being, against the negative impact of inflation.
Right, thank you. Are there any other important points from the letter that you'd like to discuss here?
We talked about a number of additional points. We talked about how gold is undervalued. We talked about how gold is underowned. We talked about gold as a currency crisis hedge. We mentioned, I think, 8 different reasons in our letter, and I encourage clients to read it.
Great. Well, we hope you all will go take a look at the letter. You can find it on our website, which is www.pekinhardy.com. And in the meantime, we hope you all stay safe and healthy, and we'll see you next time. Thank you so much.
Thank you.